Hey everybody, Rob Maurer here, and yet again, we are in the throes of a volatile macro environment, so we'll be talking about that a little bit more today. We've also got some reporting on the Cybertruck, not really sure why, but we'll clarify what's going on there. Got some news out of China, then a court case update for Tesla, and a couple other things as well. So the seesaw that has been 2022 in the market so far has continued today. Tesla finishing down 6.75% to $1,031.56, more than giving up the big gains from yesterday, in what again turned out to be a really rough macro environment. Even though the Nasdaq opened in the green, it fell consistently throughout the day and closed down 2.5%. Down 2% or more is a pretty good benchmark for a really bad day for the Nasdaq. That's only happened 17 times in the last 12 months, so basically a 2% or more drop is a bottom 5% day for the Nasdaq. Specifically, the 2.5% drop today comes in as the 9th worst day for the Nasdaq in the last year. So yeah, pretty bad day. I think Tesla getting caught up in that, though there may be a couple other factors, which we'll talk about here in a second. But it was a little bit perplexing. Of course, we had that inflation report this morning. We had jobs reports this morning. But as I said, the Nasdaq opened in the green after these reports. Then another common indicator to look at would be the 10-year yield, which we talk about on occasion. That actually has been dropping over the last 5 days and dropped throughout the day today. So kind of an odd day, but let's go through those reports that did come out this morning just really quickly. So for the PPI, the Producer Price Index, the headline number did come in pretty close to expectations, actually even a little bit below, up 9.7% year over year versus expectations of up 9.8%. But from doing a little bit of reading on it, it sounds like some of the individual segments of the report maybe were a little bit mixed. Although sometimes I feel like stuff like that maybe is just looking for justification for things that have happened. So I don't have too much to add to this that we didn't really talk about yesterday with the CPI, or Consumer Price Index, which, by the way, the only difference is here. Consumer price would be prices that consumers are paying for things, whereas PPI, or Producer Price Index, think more about what businesses would be paying for things within the supply chain. So of course, there is going to be some correlation there, and a lot of the stuff we talked about yesterday will apply to the PPI as well, but on occasion, maybe some insightful differences. As I mentioned earlier this week, the other macro report with a lot of attention on it this morning was the weekly initial jobless claims report. That did come in a little bit higher than expected. Forecast was 200,000, and it came in at 230,000 claims. Still a much lower number than what we saw throughout most of 2021, but potentially a little bit of a reversal of a downtrend, seeing the biggest increase here since November. So perhaps some concern around what's causing that, if that's COVID related, etc. A little bit more on that with the Tesla specific news later. So let's hop into that. I want to start off with the Cybertruck because for whatever reason, this seemed to be the hot media topic for Tesla for the day. As far as I can tell, seemed like Gizmodo kicked this off about an hour and a half before market open this morning. They published an article with the headline of Tesla removes promise of 2022 production on Cybertruck website. The subheading reads, "Is it too early to call Elon Musk's Cybertruck vaporware?" Well, considering the best case forecast for the Cybertruck was that it would basically start production like a month or two ago, yeah, I would say it's too early. And of course, we've known for quite some time now that Tesla has already moved that back into later in 2022. Anyway, the premise of this Gizmodo article is that they have noticed that on the Cybertruck design studio page, Tesla has slightly tweaked the text and they have removed mention of 2022, which previously was on this page. So if we look at the Wayback Machine, as of December 8th, on that order screen, that text read, quote, "You will be able to complete your configuration as production nears in 2022, end quote. Whereas if you open up the site right now, it reads, quote, "You will be able to complete your configuration as production nears," end quote. So they just completely removed the in 2022 part from that text. So Gizmodo noticing that, and then I think a bunch of other publications just picking up and kind of repeating that same article premise. So I don't think we've actually specifically talked about this on the podcast yet. I could be missing it from my memory, but it is worth noting that this is a different change to the order page than what we of course talked about with Tesla removing the ability to select which trim and whether or not you wanted to order FSD. So that happened and then some time passed and then this change happened differently. Now that also doesn't mean it's a brand new change. Again, looking at the Wayback Machine, this was in place as of December 23rd. So sometime between December 8th and 23rd was when this change happened. And it could be as simple as Tesla just wanting to change that language as we moved into the actual year 2022. I certainly don't love the articles about this. I think most of them fall right into that clickbait category. But at the same time, I do think it's worth examining little changes like this because sometimes they do give us insight into what Tesla has planned or expects. For what it's worth, Elon did tweet that product roadmap update tweet on December 3rd. So it looks like Tesla would have made the changes here to that language pretty shortly after that tweet. I share that just because that was something that I was curious about as I was thinking about this. But overall, I'm not really reading too much into this. I'm not seeing that this would mean a delay. I think that's probably more likely than it being good news, but most likely just a case of reading into things a little bit too much and people trying to generate content and get those clicks, which I'm sure worked very well for them today. Anyway, hopefully we'll have some more and new clarity on that with that product roadmap update on the earnings call. Okay, so I'm actually jumping in here after recording that segment because after recording that, Reuters did publish an article citing a source which has told them that Tesla is now targeting initial production for the Cybertruck by the end of the first quarter 2023. Reuters writes that the person said the delay comes as Tesla is changing features and functions of the electric pickup to make a compelling product as competition heats up in the segment. So we already knew Tesla was working on changes for the Cybertruck. I don't really think that's because of competition, maybe some smaller things, but anyway, that is the report for now, first quarter 2023. Obviously just one source, but I do believe this is probably likely. I'm a little bit annoyed because I'm working on a prediction episode for 2022, and one of those was going to be no Cybertruck deliveries. I just think there's a lot that Tesla's going to be doing this year. They have more than enough to fill this year, and the Cybertruck is a difficult product with a lot of new technology. I think it's going to take some time, and yes, it already has had some time, but there's a lot on the plate for this year, and it's going to go quick. So thanks, Reuters. I guess now I have to find another prediction to fill that slot. Anyway, sorry for the choppiness of this, but let's continue on. All right, next up here, we've got a couple of pieces of news out of China. First, I do want to go back to what I mentioned there with the jobless report, possibly increasing COVID-related concerns, at least as far as it relates to economic activity. So I mentioned China because we are seeing some impact here. So a Volkswagen spokesperson told Reuters that, quote, due to the recent COVID-19 outbreaks, both the FAW VW vehicle plant and VW automatic transmission Tianjin component factory have been shut down since Monday, end quote. Similarly, Toyota has also halted operations at one of their factories in the area also since Monday. So when it comes to stocks for automakers or Tesla stock specifically, maybe some concerns related to the action that Volkswagen and Toyota have taken here. This isn't something I would expect Tesla to do. I wouldn't worry about Giga Shanghai shutting down. Obviously, it's a possibility, but I think it's a low probability. But my thoughts don't necessarily mean that others wouldn't have concerns. And even if Tesla does continue to operate as normal, there could still be concerns with the supply chain. That said, it's also not like all automakers got pummeled today or anything like that. Ford was actually up today and they crossed a $100 billion market cap somehow. That is for the first time ever. Their price to earnings right now is 35 times, which is actually higher than Apple and Google. Now, I'd have to look more closely at Ford's financials to understand if that earnings multiple is realistic or if there are one-time items there maybe negatively impacting that. My intuition would be the opposite because I think they had some gains from their Rivian investment, but I don't know, certainly an interesting valuation. The stock is not at an all-time high for Ford just because of the dilution over the years. They have had higher stock prices, but this is the highest market cap. If I were Ford, I would be strongly considering raising some capital at these levels. Anyway, the other news that we have out of China is the reported December production for the Model 3 and the Model Y from the Ministry of Industry and Information Technology. They say that there were 28,378 Model 3s produced and 38,381 Model Ys, totaling 66,759 for the month. So looking at our production tracking sheet, this is pretty similar to what we had last gone through. It's about 1,500 more vehicles in Shanghai than the estimates I had, which also means that the number here for Fremont is about 1,500 lower, still leaving a really nice 126,600 vehicles from Fremont for Q4, annualized to about 505,000 per year. And that is quite a bit higher than the previous peaks that we had seen. So happy to see that. Hopefully that keeps increasing as Model S and X continue to increase. Then looking at Shanghai, that puts the total for Q4 at 179,000. But of course, we're more interested in December, particularly the model split here, which shows by far record production for the Model Y at that 38,000 level. That's more than a 10,000 vehicle increase from any prior month's production. And that puts weekly Model Y production for December at just shy of 8,700 per week. That would annualize to about 450,000 per year just for the Model Y, but of course, probably a little bit lower than that when you take downtime. And then for the Model 3 production coming in at that 28,000 level, that was actually pretty consistent throughout Q4, basically 28,000, give or take a few hundred vehicles each month, which continues to make October pretty perplexing because again, we did have that week of downtime to start October, and yet still basically the same number of Model 3s produced. So we saw a higher weekly rate that month, but with more time in November and December, that overall production kind of stayed the same. So I don't know if there'd be another constraint there or what's going on, but maybe we just have to kind of resign ourselves to that 29,000 per month production for Model 3. Definitely something we'll watch closely throughout Q1. In addition to that production data, we did also get a little bit more information from the CPCA, China Passenger Car Association, on domestic sales in China for the year 2021. And we've got some nice numbers here for the Model Y. So we had talked, I think last month, about how there might be a possibility of the Model Y overtaking the BMW X3 to be the top selling premium SUV in China for the year. And well, now that we have the full year numbers, the Model Y did just that, and pretty easily, 170,000 sales for the year, leading the segment 13% above the BMW X3 at about 150,000. Again, that's premium SUVs. In the overall SUV category, the Model Y actually came in the top 10, number 9, and really not that far off some of these higher ranking vehicles. You can see the CR-V and the RAV4 there in 3rd and 4th place. The Model Y only coming in about 20% below those levels, and obviously the Model Y was not at full production for the entire year. So I think the Model Y actually has a pretty decent shot at moving up into that top 3, passing the CR-V this year. Really, that'll come down to export versus domestic choices, and some of that will be impacted by Giga Berlin. So we're counting on Giga Berlin there for Tesla's ranking in China. All right, next here we've got an update on a Tesla court case that we've talked about a few times already this year. This has to do with the Trump administration previously rolling back some emissions penalties, which has resulted in some of the regulatory credits that Tesla generates being less valuable because they are less demanded with these rollbacks. NHTSA has been looking at the rollbacks and considering pulling them back, but Tesla has been pushing for immediate action, and they have filed a couple of court requests to try to make that happen immediately. And previously they were denied, then they appealed. Now today we're hearing an update on that appeal, and that unfortunately for Tesla has also been rejected. So I do think there's still a possibility of NHTSA rolling that back. It's just not going to happen immediately like Tesla would like. Unfortunately, I haven't heard any updates recently on where NHTSA's at in the process, but I'll try to keep an eye out for that as well. All right, last couple of things here. First up, we've just got a small comment from Elon on the new version 11 user interface. Somebody on Twitter did a little mock-up of some things that could be changed, basically allowing some of the car settings, for example, wipers or fan speed, to be pinned down in that bottom quick access bar, which I do think a lot of people would appreciate. But Elon replying to a Teslarati article on this mock-up saying, quote, "Almost all input is error. Car should do the right thing automatically," end quote. Idealistically makes sense. I think there are pretty reasonable counter arguments to be made as well. I think my primary question would be, why not both? Make automation as perfect as you can, but the screen real estate is there. I don't see too much of a downside of taking advantage of it. Lastly then, just a quick reminder that the NASDAQ will be closed on Monday in observance of Martin Luther King Jr. Day. I think we'll probably still have an episode, but I guess kind of depends what's going on. We'll see. Not quite there yet, just giving a heads up. We'll still have our episode tomorrow as usual. So as always, thank you for listening. Make sure to subscribe and sign up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for that Friday, January 14th episode of Tesla Daily. Thank you.